Hello everyone, welcome to Options with Doug, streaming live on Monday, Wednesday, and Friday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X. My name there is @DougPless. Here are the key tenets to my approach for trading. This is the basis of my trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures, and certainly in the large cap tech stocks like the Magnificent Seven stocks that I follow and trade, as well as the equity index futures like the S&P 500 and the Nasdaq 100. And for the S&P 500, SPX is the underlying index, SPY is the ETF version of that index, and the ES futures contract is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. And for the Nasdaq 100, NDX is the underlying index. QQQ is the much more liquid ETF version of that index. And the NQ futures contract is a derivative of NDX. And just like the S&P 500, when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis as opposed to fundamental analysis or technical analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as the directional bias. And the second step in my process is execution. And I look at real-time order flow in Bookmap, in real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups. And when I talk about setups today, I will be talking about an underlying asset, setups in an underlying asset. And setups in that asset can be taken with futures contracts, shares of stock, or options depending on the asset and the way you like to trade. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. Here's my agenda for today, Friday, August 2nd. First of all, I want to go over news items, economic data, events, and earnings reports, wrap up the week. Then I'll go through my positional analysis. Then I'll take a look at some setups from earlier today. Then I'll look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know and I'll be glad to do that. All right, let's start with news items for actually yesterday and today. So yesterday, Apple and Amazon reported earnings. When I get to setup review, we'll take a look at those stocks, see how traders have responded to the earnings reports. And so let's start with economic data for today. And actually, I want to talk about economic data that came out yesterday as well. But first, let's take a look at today. Actually, let me talk about yesterday. Yesterday, Of course, the FOMC meeting and announcement was on Wednesday, and initially the market seemed to give an all clear. This is Wednesday. This is an SPX chart for the week, 1 minute, 5-day chart. This is Wednesday. Market gapped up. Looked like after the FOMC, the market gave an all clear. Then this is Thursday, 10 a.m. Manufacturing PMI came out. So first of all, yesterday, jobless claims came out at 8:30 a.m. Eastern Time, and they were greater than expected. So jobless claims, 8:30 a.m. Eastern Time, greater than expected. And then at 10 a.m., ISM Services PMI data came out, and that was less than expected, less than previous, also less than 50, indicating contraction. The market didn't like that and dropped sharply lower. All right, so that's yesterday, kind of the macro point of view. And what it looks like to me is now bad news is bad news, and traders are thinking that the FOMC is too tight with its policy and it's going to be too slow to start easing the federal funds rate. All right, then today, 8:30 a.m. Eastern Time, let's pick that up now by taking a look at the data for today. This is the jobs report that came out at 8:30 a.m. Eastern Time. Jobs report, much less than expected, much less than the previous number. Also, the unemployment rate was higher than expected and higher than the previous number. More bad news. So now bad news is bad news for the market, and the market has moved sharply lower. We'll take a look at the reaction in the ES futures in just a minute. And then at 10 a.m., we'll take a look at the reaction. This is kind of minor data, certainly probably on the low impact scale, but there seemed to be a reaction. Factory orders, 10 a.m. came out, and that was also less than expected, less than the previous number. So more bad news. All right, let's move on now to Bookmap. This is the ES futures and Bookmap. This is the 8:30 a.m. data release jobs report, initial bearish reaction. Note this, I'll talk more about this level in just a few minutes. This is pre-market, so I'm looking at an SPX level here of 5,400, that level that has acted as support, more about that later. Then today acted as resistance after the data release. And the S&P 500 did try to recover. All right, so more about these levels in just a minute. So let's move on now. And before taking a closer look at this chart, let's take a look at a higher time frame so we can get a better sense of what the S&P 500, the SPX, has been doing. So this is a one-day chart for SPX. We've seen this chart before, big rally last year. Correction began April 1st this year, and the rally resumed after the April expiration. That's shown by the red vertical line, the April 19th options expiration. Rally resumed. Then let's move on to July now, and the correction began on the Wednesday before the July options expiration. That was the VIX expiration, and it looks like this is going to turn into another correction. All right, so let's pick that up now with a 1 hour chart. So this is the VIX expiration, Wednesday the 17th. Market began to move lower. This vertical red line may be difficult to see. That is the Friday, July 19th options expiration. Looked like the rally might resume after that. Didn't last long. A little bit of consolidation. We'll take a closer look at this in just a minute. Consolidation between 5,400, that support level that I mentioned earlier. 5,400 right here. Then on Wednesday, here's the breakout above that level, and then the reversal on Thursday after the ISM PMI data. And currently the put wall at 5,300 as holding a support. All right, so let's focus on these levels now. First of all, the dashed purple lines are showing the lower and upper weekly expected move. That's based on the options market, based on the closing price for SPX from last Friday. Note SPX is trading well below that lower daily weekly expected move. Those levels remain in place for the entire week. And hello, first for last, welcome, glad you're here. All right, so SPX trading below the lower weekly expected move. The dashed blue lines, may be difficult to see the blue lines just right above the purple line. Dashed blue lines showing the lower and upper daily expected move, also based on the options market, based on the closing price for SPX from yesterday afternoon. Note I do post those levels in Discord every day the day before. All right, so SPX today trading below the lower weekly expected move and the lower daily expected move. All right, let's take a look at the Spotgamma levels on this chart. These are, I'm going to point out the key daily levels. These are available to Spotgamma subscribers. They're available on a variety of trading platforms. This is Thinkorswim, again, a 30-day, 1-hour chart. Let me point out the key daily levels. First of all, here's the absolute gamma strike at 5,000. That's the strike with the largest absolute positive and negative gamma. So that's where most of the gamma-weighted open interest is concentrated. And note this week that level has oscillated between, jumped up and down between 5,000 and around 5,500, now back down to 5,000. So 500, actually it was a 550 point move lower from yesterday. So that's the absolute gamma strike. The next level up is the put wall that I mentioned earlier. That's a strike with the largest net negative gamma that can be expected to act as support. And the mechanism there is, as price moves down toward that level, traders will be taking profits on their puts and potentially rolling them further down or out in time. All right, so there's the put wall. One successful test. Hello, Caesar. Welcome. Glad you're here. So one successful test of the put wall so far. Probably not the last. So that's the put wall. The next level up is the volatility trigger at 5,500. That's a strike with the largest. That is the Spotgamma's proprietary volatility flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. And this tends to enhance or increase volatility. And note, SPX is trading well below the volatility trigger in a very negative gamma environment. So in a very negative gamma environment, I'm definitely looking for bigger moves, more trend days, wider trading ranges. And note the volatility trigger did shift slightly lower, just 5 points lower. So not a significant shift lower in the volatility trigger. And the call wall remains at 5750. That's the strike with the largest net positive gamma that can be expected to act as resistance, and certainly not in play. All right, so those are the key daily levels. And surprisingly, to me, there were not not many shifts in levels. Again, just a minor shift lower in the volatility trigger, and then the absolute gamma strike, which has oscillated up and down this week. All right, let's wrap up our view of SPX by going back to our 1 minute chart. And again, I'm focusing on this week, price action this week. 5 days, so starting Monday. Regular trading hours in the dark shaded portions. Consolidation between 5,400 that has acted as support. And remember that test of 5,400 today from below was before the cash opened, so it's not shown on this chart. Breakout above the upper end of this range, which was about 54.90. Breakout above that level yesterday. Then again, the rather sharp reaction to the PMI data. That's the way I see it. And then a gap lower today, below the lower daily and weekly expected move. Volatility trigger way up here. So SPX in an extreme negative gamma environment. And here's the successful test so far of the put wall. All right, so to wrap it up, again, key level now is the 5,300 put wall, and looking for a potential scenario, depends on what happens with that put wall, but looking for a potential scenario, something like April, this April expiration, so any turnaround, any bullishness, two potential scenarios. One, successful test of the 5,300 put wall, or waiting for options expiration in a what may remain a very negative gamma environment, and those puts expiring at the August expiration. So potential April scenario playing out for the August expiration, or successful test of the 5,300 put wall. All right, let's move on to Bookmap now. So in Bookmap, I have my own cloud notes, so I can show SPX levels, key SPY levels, and also key ES levels. So first of all, SPX levels. There's this 5,400 level that acted as resistance earlier today. Again, that was 5,400 was support earlier this week. So now support acting as resistance. And here's the 5,300 put wall. Note there is a difference in price between ES and SPX. And today that difference has been ranging pretty widely, I would say, between 30 and 31.5. That's what I was initially using. Or actually, I posted my final index relationships in Discord, the ES to SPX difference at 31 to 32. Right now, it's closer to 30. And that's what I'm using. So I'm showing the 5,300 put wall, SPX 5,300 put wall at ES 5330. And that's about right. The low of the day for SPX was right around 5302. We just saw that on the 1 minute chart. All right, those are the SPX levels. I also have SPY levels on this chart. Yellow just showing round number levels. The 534 level was kind of key earlier today, as well as key support earlier in the day. 537 resistance. Another key SPX level, the 5349, and just above that 5350. And note the break below that level in high volume just after the 10 a.m. factory orders data release. All right, so those are the levels in play for today. 5,400 on the upside, 5,300 on the downside, and then a key level right now being the 5,350 level. Again, price broke down below that level, and then just before 1 p.m. it had acted as resistance. It looks like price may be heading back down to the 5,300 level. Hello, Stephen. Welcome. Glad you're here. All right, so that's the S&P 500. I mentioned shifts in levels for the SPX. Surprisingly minor volatility trigger, 5 points lower, absolute gamma strike, back down to 5,000. And for SPY, the volatility trigger also shifted lower, and the call wall actually shifted higher. And we'll take a look at setups in just a few minutes. All right, let's move on to Nasdaq. This is the NQ futures and Bookmap. All right, let's take a look at the underlying index charts. I'm going to go to QQQ first. This is a 1-minute chart, just showing price action for today. QQQ, this 450 level has been a key level. Great entry point for a short just after the 10 a.m. data release. Price was already in a downtrend, making a series of lower highs. We'll take a look at that in just a minute. Price came back up to that level right around 11:45. Tested that level multiple times for an hour, then broke lower. Maybe heading back down to the 445. That's just a round number level, not a Spotgamma level. So there were 2 Spotgamma levels for QQQ in play for today. The 450 large gamma 3 level and the combo level just below that, combining NDX and QQQ gamma weighted open interest. All right, so that is QQQ. We'll talk about setups in just a few minutes. All right, let's take a look now at NDX. Here, this NDX, let me zoom in to price action for today. NDX, this combo 3 level, 18,494, is at about the same level as the QQQ 450 level, acting as resistance. And here's that level that I just mentioned. You can see there are actually 2 white lines there. That is that 18,494 combo level and also the QQQ large gamma 3 level acting as resistance. And this is the 445 level that has acted as support earlier today. And then here's the breakdown. We'll take a closer look at this in just a minute. The breakdown at the 450 level, good entry point for a short if you were waiting on the data. Good for about 5 points in QQQ or about 200 points in Nasdaq in Q futures. All right, shifts in levels for Nasdaq. For NDX, volatility trigger shifted lower. And for QQQ, the put wall shifted lower and the absolute gamma strike shifted lower. All right, so the put wall shifted down to 440 for QQQ. So QQQ has room to run lower. And for NDX, the put wall is down at 17,000. So according to that, The Nasdaq still has plenty of room to run lower. All right, so we'll take a look at setups in a few minutes. Let's finish up our positional analysis by taking a look at gamma notional, and then we'll take a look at the Vanna model. So in a negative gamma environment, I definitely like to focus on gamma notional. This is market maker's position on the gamma curve at the beginning of the day. This will give me an indication of how volatility, price action, and how market makers may be reacting. Note all these numbers are negative. This is the gamma notional market maker's position on the gamma curve at the beginning of the day for the S&P 500 and the Nasdaq. All these numbers are positive. Spotgamma assumes for an index that traders are long puts, market makers are short puts, hence the negative gamma, positive theta. And again, in a negative gamma environment, market makers have to trade with price to hedge their delta exposure. And we can see how that works with the Vanna model. What this chart is showing is market makers delta notional on the vertical axis, spot price for SPX on the horizontal axis. There are two curves on this chart. The white curve is showing how market makers delta notional may change with changes in price only, and the purple curve adds implied volatility to the equation. That shows how market makers delta notional may change with changes in price and implied volatility. And that change in delta with a change in implied volatility is the Vanna effect. Vanna is a second order Greek. All right, let's check on prices. So far today, for SPX, the high of the day was right around 53.82. So that's pretty far up on the curve here, 53.82. And we know the low of the day was right around 53.02, just above the put wall. All right, so that's right around there. So price dropped earlier today. So as price drops, implied volatility increases. Market makers delta notional will increase. And note the difference in their delta notional, just considering price only and implied volatility. Market makers delta notional is increasing. They have to sell futures to hedge their delta exposure. And as price tries to rally, implied volatility drops. This works both ways. Market makers can buy back short futures. So again, very negative gamma environment. This works both ways. Price drops, market makers have to sell futures, enhancing the move lower. Price starts to move up, implied volatility drops. Market makers can buy back their short hedges, and they're hedging the S&P 500 with the S futures, and price rallies. All right, Hector, I don't have time to read all your question. I do point out the strong levels on the session volume profile occasionally, just to emphasize the volume trading at that level. And you do indicate that was recommended on the Spotgamma website. I've been doing this for a long time, and I have my own approach using Spotgamma data and Bookmap data, and I'm very confident in my my approach. So again, it's just I would say more of a point of interest, and not necessarily something that I would take into account in my trading. All right, so based on this, I was definitely looking for higher volatility today, and based on the way prices played out around levels, I was looking for, and Spotgamma has talked about this, a break of 5,400, looking for a quick test of 5,300, and that's exactly what happened today. Break of 5,400 and a quick test of 5,300, and that was noted on the Spotgamma website. And again, that's exactly what happened today. All right, so let's move on. So my thesis for today, again, given the the reaction to data, the way the kind of the macro perspective, the break below 5,400, my thesis for the day was bearish. All right, so now let's move on from positional analysis to real-time execution. Move on to the S&P 500. As always, I want to start by taking a look at what options traders have been doing in the S&P 500. So this is the hero signal, hedging impact real-time options. This is available to Spotgamma subscribers, again for the S&P 500. What this chart is showing in real time is options trades and market maker hedging activity for a combined signal of SPX, SPY, XSP, and ES futures. So this is the index signal. There are two lines on this chart. The first line is price for SPX, and the purple line is the hero signal. A rising hero line indicates traders are taking positive delta positions. They're buying calls and or selling puts. And a falling hero signal indicates they are taking negative delta options positions. They're buying puts and or selling calls. And yeah, Hector, I would say that is valid for identifying a strong level. Let's call it a level. If volume is concentrated at that level. All right, so that is the index signal for the S&P 500. There are two signals that we can take a look at for the S&P 500. So again, the index signal, then there's the equity signal. What this chart is showing is options trades and market maker hedging activity for all 500 stocks in the S&P 500. And price, again, is in terms of SPX, the white line, price for SPX. This line typically is smoother and often corresponds more closely with price action. That's the equity signal. And in my experience, the index signal is often a little bit more noisy. There's more going on here, but it can often act as a leading signal. All right, let's start with this. I'm going to open full screen, zoom in, we'll take a look. Take a look at the morning, price action of the morning, looking at the short this morning. Let's go to Bookmap. Back to the S&P 500. Let's zoom in. Zoom into price action in the morning. So again, here's the reaction to the 8:30 a.m. Eastern Time data. Multiple test of the SPY 534, and again when the 10 a.m. data came out, a break below, and a break below the SPX 5350 in high volume. So if you like to trade breakouts or breakdowns, there you go, high volume. So let's go back to Hero now. So note before that breakdown, the hero signal was already trending lower. So if you wanted to get in earlier, right around 940, hero signal, the index signal, trending lower, making lower highs, lower lows, as the S&P 500 was also moving lower, making lower highs, lower lows, and then the final sharp breakdown right after the 10 a.m. data release. Let's go back to Bookmap. So let's zoom in now. Focus on the cash open. Oops. Trend line showing, and this is the cash open right here. Cash open right here, 930. Trend line showing ES making a series of lower highs. Again, there's the breakdown. So any of one of these points would have been a valid entry. Pull back just below VWAP there to the 536 level. Pull back to 535. Or actually the ES 5400 level. So S&P 500 making series of lower highs. That was a little bit more pronounced in the Nasdaq that we'll take a look at in just a minute. All right, so again, breakdown and then a move toward the 5300 put wall. All right, let's go back to Hero now. So just after this move lower, 10 a.m., then the hero signal for the index hero signal became more difficult to interpret. That's pretty typical. Again, it's very noisy, can often act as a leading indicator. So this is the first signal that I look at in the morning. Now let's move on to the equity signal. Zoom in just a bit. Again, a little bit smoother, a little bit more in sync with price action. Making a series of lower highs with price, then the sharp breakdown, the flow alert that came in just before the big drop lower. Then right after, right around 10:15, traders started taking positive delta positions. Let's see what they were doing. I shifted to puts and calls. I'm going to have to jump back. So while we're on the index signal, we can see that traders were buying calls from the open. Sorry, wrong tool. We're buying calls from the open. Paused briefly, then started buying calls again. So that's the index signal, traders buying calls. Then let's move to the equity signal. So right around that same time, right around 10:15, they started buying calls, shown by the rising orange line, and selling puts, shown by the rising blue line. So from about 10:15 to 11:45, call line, blue line moving in the same direction. Then the put sellers took their foot off the gas. And then right around 12:45, they started buying puts again, started selling calls, and price started to move lower. So overall, this signal providing a little bit more clarity. So just like yesterday, options trades, market maker hedging activity, and stocks and equities have been the key driver of price. And that was definitely the case yesterday. Caesar did ask about that. And yesterday, in the Nasdaq, we'll take a look at this. And let's go ahead and take a look at this now. Yesterday, Here's a picture of Nasdaq. This is I posted this on Discord and on X. Note the rising cumulative volume delta yesterday, and price continued to move lower. And here's the reason why. This is the Mag 7 from yesterday, Mag 7 hero signal that we'll take a look at in just a minute, and definitely driving price. Traders were selling calls and buying puts in the Mag 7 stocks yesterday, and that was definitely driving price. So again, that's yesterday. All right, so moving back today, still on the equity signal, also driving price. Traders for the initial move lower, buying puts, selling calls. That reverses. Price finally responds higher after a successful test of the 5,300 put wall. All right, let's move on. Let's take a look at Nasdaq now. I'm going to shift back to total. So just like the S&P 500, there are two signals that we can take a look at. This is the index signal for Nasdaq. Typically, again, more noisy, often providing a leading indicator. It did yesterday. Let's take one last look at yesterday. This is the Nasdaq signal from yesterday. I thought it started to move lower about 5 minutes before the Mag 7 signal. This is what I used yesterday for my initial entry point for a short on the Nasdaq. All right, so the index signal, again, a little bit more noisy, but can often act as a leading indicator. All right, let's move on to Mag 7 today. That's what we'll take a look at today. So the first signal that we just take a look at the Nasdaq was a combined signal of options trades and market maker hedging activity for the Nasdaq and QQQ. And then this is a combined signal similar to the equity signal for the S&P 500, showing options trades and market maker hedging activity for the 7 stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla. These stocks make up a large component of the Nasdaq 100 and often drive price in the Nasdaq 100 and the S&P 500. All right, let's zoom in on this. Go to full screen. So options trades driving price higher and lower in Nasdaq. Here's that move lower, right around 941. Traders started taking negative delta options positions in the Mag 7 stocks. Price moved lower. And I'm going to shift to puts and calls. I'm going to have to jump back. So initially in the first 10 minutes, traders were selling puts, buying calls. Then 941, both lines shifted lower. Blue line, orange line moving the same direction. Very powerful directional indicator. In this case, it was bearish. All right, let's go take a look at Nasdaq now. Go to NQ. Let's zoom in. Of course, the lower price target was much more clear on the S&P 500 with the 5,300 put wall in sight. But I thought this setup was a little bit more clear for a short. Oops, sorry about that. Not sure what happened there. Let me try that again. All right, here we go. All right, Nasdaq. Sharp move up at the cash open. Clearly making a series of lower highs. Very, very clean trend line, making a series of lower highs. And there's that final break below the 450 level, right after the 10 a.m. data release, as traders were taking negative delta positions in the Mag 7 stocks. All right, let's zoom back out. All right, sorry about all the zooming. I've got a lot of charts open. All right, let's go back and take a look at Hero. All right, so right around 10:15, traders started actually right around 10:40 maybe started buying calls. So they were selling calls. Calls level off, become neutral. They start buying calls. They had already started selling puts. In this case, blue line, orange line moving the same direction. Price moves higher. Put lines, levels off. Call buyers take the foot off the gas. Now both the blue line, orange line are moving down, looking for price to move lower. Note this sharp drop in the call line. That's a large block order in one of the Mag 7 stocks. We'll see if we can figure out which stock that is. All right, let's move on to some stocks now. I want to start with the stocks that reported earnings. Let's take a look at Apple. Zoom in a little bit. 225 key gamma strike above. Traders were aggressively buying calls at the open, shown by the rising orange line. Also selling puts. Note the flow alert that comes in about 9:40. Call buyers quickly take their foot off the gas as price approaches that 225 key gamma strike. Call buyers become call sellers. Price moves lower. They start buying calls again with a price dip. So the main move, right from the open up until about 9:50, 9:55. Let's go take a look at Bookmap. Go to Apple. Oops. Try that again. All right, Apple, there's that 225 key gamma strike. Right here, final price target for today. Sharp move up. Price pulls back as call buyers take the foot off the gas. Price moves up again, finally makes it to that 225 key gamma strike. Note the liquidity level, that level. That's typical of a stock. They come in at the cash open. Those are limit sell orders above the price, often act as a magnet for price. That's Apple. And note the move higher began before the cash open. And of course, options trades began at the cash open. Traders again buying calls. They started buying calls again somewhere around 11:50. Another flow alert comes in. That's when price moved up to the 225 key gamma strike. Some aggressive call buyers coming in. Let's take a look at Amazon. Just the opposite picture for Amazon. Traders were selling calls shown by the following orange line, buying puts. Price moves lower. Looks like it found support right around 161. Call sellers take the foot off the gas. Start buying calls. Price moves higher, trying to consolidate. Note traders continue to buy puts, shown by the following blue line, but it looks like the call sellers, call buyers are in charge of price for Amazon today. Traders selling calls, price moves lower, finds support at 161. Traders start buying calls. Now it looks like price is above the opening print. Let's go back to Hero. Note Amazon is trading well below its put wall at 170. And let's take a look at Meta. Meta did report earnings after the market closed on Wednesday. So Meta today found resistance at the 500 call wall key gamma strike. Traders were aggressively buying calls. They took the foot off the gas as Meta reached that level, started selling calls. Price moved lower. And now the options traders have mostly taken the foot off the gas. Puts have been pretty flat most of the day. They are mildly selling puts, that's shown by the positive notional value, and still net for the day, call sellers. Let's go take a look at Meta and Bookmap. Here's the reversal at the 500. Call wall key gamma strike. Call wall doing its job as expected, acting as resistance. Great entry point for short or to buy a put. Almost a 25-point move lower. 24-point move lower. If you bought a put, you really had a great day as price moved up to that 500 level. All right, so now price consolidating between 485 and 490 or so. Let's go back to Hero. Actually, let's take a look. So we know that the options traders really took their foot off the gas right around 10:30. Let's see what is driving price now. probably a little bit more aggressive buyers than sellers, shown by the green volume dots. All right, another stock I want to take a look at is Microsoft. Bearish morning in Microsoft. Let's see what options traders are doing. Let's go to Microsoft. Traders are selling calls, shown by the falling orange line. Buying puts, shown by the falling blue line. Options traders take the foot off the gas. Somewhere between 10 and 10:30. Now price consolidating. Blue line, orange line still moving slightly down. So net for the day, they are put buyers and call sellers. Go back to Bookmap. There's that initial move lower, reversal. I can't tell if that 415 reversal was before or after the cash open. Let's zoom in on that. Probably after, yeah. There's the opening print. Quick move up to 415. Couple of entry points for a short, right at 413, as traders are taking negative delta positions. All right, the last stock I want to take a look at is Nvidia. And if anybody has any stocks they want me to take a look at, please let me know and I'll be glad to do that. All right, so here's Nvidia. I think Nvidia traded up to 120 just a couple of days ago on Wednesday. All right, let's see what options traders have been doing. Go to Nvidia. Remember, in the Mag 7 signal, let's take a quick look at that. Here's that move lower, that large block order selling calls that is at 1404. I'm talking about this line right here, large block order selling calls, 1404, 204. Let's go to Nvidia. And there, that was showing this order. That's 1404 for Nvidia in the Mag 7 signal. That's often the case. Sometimes the options volume in Nvidia definitely can dwarf a lot of other stocks. And the options trades in the Mag 7 signal are definitely reflected. The Nvidia options trades definitely reflected strongly in the Mag 7 signal. Earlier today, traders were taking negative delta positions just a few minutes after the cash open. Selling calls, buying puts, price moves lower, flow alert, get your attention, signal significant options activity. And then right around 10:15, they started selling calls, buying puts, let's zoom in on this just a little bit. One thing I noted, these flow alerts that signal significant options activity can often be mean reverting signals, signaling a shift in flow. That's what they did here. So two alerts signaling the shifts from, in this case, from first case from positive to negative, the turning points, and then the second case from negative to positive delta. All right, so there's Nvidia. Traders taking positive delta positions, negative delta positions, then around 10:15 positive delta positions again, then right around 11:45 options traders take the foot off the gas. Price starts to move a little bit lower. Let's go to Bookmap. There's the initial move higher, move lower. Overall, pretty choppy price action. Nice uptrend began around 10:15. One indicator that I have in the subchart here that works very well for Nvidia is this market pulse price change indicator. And this often marks the, if you're looking for a deeper pullback in a trend, this market pulse price indicator, price change indicator, often marks the deeper pullbacks, good for entry points. In this case, for a long in this uptrend right here. Market pulse price change indicator, lining up with the deeper pullbacks, confirming those deeper pullbacks for an uptrend entry. I'm looking at the bright red for the lower extremes and the bright green for the upper extremes. So then now looking at this downtrend, market pulse price change indicator. All right, let's take a quick look at the S&P 500, see what it's doing in the Nasdaq, and then we'll call it a day. All right, so it looks like the S&P 500 has found strong support at the SPY 530 level. Let's see what options traders are doing. I'm going to go back to this. Go back to the total signal. First of all, shift to the index signal. That's starting to move higher now. Equity signal also starting to move higher. Note even the equity signal is showing that big block order that was Nvidia, showing how the options volume can dominate even the S&P 500. Let's check Mag 7. Also making a move higher. Check Nasdaq. All right, last call for stocks. Last call for questions. All right, Nasdaq maybe finding a resistance at this combo 3 level, as well as VWAP shown by the light blue line. One last check of the S&P 500. Also maybe finding a resistance at 532. All right, everyone, my time is up. I've actually gone over. I want to thank you very much for your questions and comments. Thank you very much for watching. Have a great weekend, and I will see you on Monday. Thanks again. Bye.